We start with that magnificent run in Meta shares, adding another 1% today, extending their win streak now to an astonishing 20 straight days. This is a Joe DiMaggio-like streak. The tech giant has added nearly $320 billion in market cap in that time, bringing its total value within a stone's throw of $2 trillion. And even as broad markets close back in on records, Meta has thus far outperformed the major indexes during its run. It has also been head and shoulders above the rest of the so-called Mag 7, as you see there, seeing gains almost triple those of its closest rival, that would be Apple. So what can we make of Meta's recent rally, and can it continue to lead the market higher? Steve, let's start with you. What do you think of Meta, and what more broadly do you think of the Mag 7 right
so
here?
In your terms, 56 game winning streak, right? We're going for that. Is that what you're going for with the Joe D? Because most people who watch the show do not know about Joe D's hitting streak on that.
They probably don't know who Joe D is.
That's a fair point. That's a fair point. Mr. Coffee.
Mr. Coffee.
So when you look at Meta, over 95%, or right thereabouts, is what percentage of revenue is derived from ad sales. So if there's a hiccup in the economy, this one's going to feel it the most. But when you look at everything that they've done right, they are the 2,000-pound gorilla in the room. Google, Meta. And when you see the two horses, Google's actually less dependent on search than Meta is dependent on ad sales. But now you saw the headline today that they're having a huge investment, putting a huge investment into humanoid robots. So it's fine. I think they're doing a lot of, they kissed the ring the same way that Musk did with Trump, and now they're developing robots the same way that Musk did with Optimus. They're going a bunch of different angles. All of them seem to be a chance to monetize something else. But make no mistake about it, this is an advertising company, and if the economy pulls back in a little bit, stumbles, and people pull back on their ad sales, they are going to feel it the most.
Julie, let me turn to you and bring you into the conversation. Meta is going to spend something like $56 billion in capital spending this year. They are not, correct me if I'm wrong here, one of the leading players in AI. Not to say that they're not involved in and benefiting from AI, but what are they going to spend all that $56 billion on, and how soon should they expect, or investors expect, it to pay off for them?
Well, I think that's the subtlety, is that it actually is paying off for them, right? Their investments in AI are enabling them to be much, much more targeted in their advertising. And they've been able to offset all of the headwinds that they had from the initial security issues with Apple. They've really been able to push right past through that and set themselves up as having large language models that are as good as the others. Open source, which makes it kind of a different wrinkle for them. But I think that what's interesting about this company is that they really eat their own cooking when it comes to AI. They're really able to integrate that into their tools and sell more ads. I agree completely with Steve that there's much more sensitivity to ad spend, but I think that they've now demonstrated that using AI to make the ads reach people better is actually going to make them the last resort for advertisers.